Hare Krishna. Welcome to Tax YouTube channel. This is C. Romanar, being a practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Mars Network. So today we are going to discuss a special video on taxation of registered non-profit organization. So let's dive into it. Let me allow to share my screen. Yes. So after cooperative societies taxation that we discussed last week, now we are moving to today taxation framework for registered non-profit organization. So the new Income Tax Act 2025 has made a major structural improvement by bringing all scattered provisions relating to the charitable and religious trust societies, Section 8 companies, hospitals, and educational institutions under one dedicated part. We can say under one umbrella. That is Sections 332 to 355 in a Chapter 17 Part B. So the old complicated patchwork of section 11, 12, 12A, 12AB, 13, 1023C, and ATG has been streamlined using tables and schedules. The core philosophy, however, of encouraging genuine charitable and religious work remains what completely unchanged. So existing RNPOs, that is registered non-profit organizations with valid registration, will continue to enjoy what all benefits without any need for fresh re-registration due to the savings provisions under the new Income Tax Act. So this segment will give you, means this session will give you what you clarity on the registration, 85% application rule, ATG approvals in the earlier act and now current Income Tax Act and compliance requirements. So let's move further. Key structural changes, old versus new act. So the biggest improvement is the consolidation of all the provisions into one place. Earlier, practitioners had to refer what multiple chapters and hundreds of words of provisos, right? So new act has reduced what the volume significantly from 839 sections to 536 overall. So the new act has reduced the volume significantly by using clearer structure, tables and schedules. Means there is a wide use of tables and schedules. So term registered non-profit organization, that is RNPO, has been introduced in a as a uniform term, that is a, we can say, as a one umbrella. So most importantly, approvals earlier granted under section 1023C are now largely merged into the RNPO registration rule. So saving provisions protect all the existing valid registrations, so don't worry about that. This consolidation will reduce to what litigation arising from the overlapping or conflicting provisions. So let's understand who is registered non-profit organization. So RNPO is the new umbrella term covering all charitable and religious entities. Any trust, societies, Section 8 company that had valid registration under the old regime, that is 12A, 12AA, 12AB, or 1023C, will automatically continue as an RNPO without any fresh action required. So new entities will follow the unified registration procedure under the new section 332 of the Income Tax Act 2025. So the entity must have objects for charitable or religious purposes as defined in the Act. As long as the registration is not cancelled, all benefits continue seamlessly due to the what savings provisions. So this uniformity removes what earlier confusion between the different approval routes. Many of you handle trust and NGOs, so this change will make your compliance work much simpler. So let's see registration framework under new act, that is section 332. So it is now registration is now streamlined under a single section 332. So new RNPO can apply for provisional registration even before starting their activities. After activities commence, they apply for regular registration. So the commissioner has a power to verify the genuineness of the objects and the activities. Smaller RNPO with an income below rupees 5 crore, please note that. Smaller RNPO with an income below 5 crore in the last 2 years each year may get registration valid for 10 years instead of 5 years validity. So this reduced what compliance burden. So welcome change. Existing registrations are fully protected due to savings provisions. The order of registration is now issued in the new form 107. So in practice, file applications well before the due dates to avoid any gap in exemption claims. So let's see application forms and timeliness, old versus new mapping. So the forms have been renumbered, of course, but the overall process remains what? Similar and more streamlined. Provisional or fresh registration is now applied through Form 104, earlier Form 10A. So regular renewal or modification applications are filed in Form 105, means fresh under Form 104 and regular or renewal under Form 105. That is earlier Form 10AB. So registration order is issued in Form number 107. Delay in filing can be condoned if reasonable cause is shown. So all application must be filed electronically, yes, with the prescribed documents. So the timeliness for passing orders, usually 1 to 6 months, have been retained with some improvements. So use the mapping utility on the portal during the transition period to avoid any confusion. Very useful this mapping utility. Please go through the income tax site and please do the access. Okay, but that is mapping utility is available on the incometaxindia.gov.in, not on e-filing portal. Please note down that. Next, income of RNPO. Let's see exemption mechanism under section 334 to 343 under New Income Tax Act 2025. So the core exemption mechanism continues. Income is exempt to the extent it is applied for charitable or religious purposes in India. RNPO must apply at least what 85% of their regular income, same as it is in the old act, such as general donations, rate, interest, and incidental business income towards their objects need to apply at least 85%. So any unapplied portion can be accumulated for what up to 5 years. That is short for 85%. You can apply for accumulation for next 5 years by giving intimation in the prescribed form, same as it is in earlier old act. So an important change is that what here is capital gain treatment. So capital gains on a sale of assets are now treated as part of your regular income and must also follow the 85% application rule. So there is a no separate automatic exemption on a reinvestment as was available earlier under the old section 11(1)(a) to the capital gain. So there is also a deemed application option through Form 108 for cases where actual application is delayed. So this requires what? Careful planning from our end for the client, especially for RNPOs that frequently sell assets for under the capital gains. Let's understand 85% application rule. So application of income is interpreted widely but must be towards the objects of what? RNPO, and can include both revenue and capital expenditure. So corpus donations are generally not considered as a part of your regular income. Donations given to the other RNPO, please note the donations given to other RNPOs are subject to certain limits to qualify as an application of the income. So if the 85% application falls short, the shortfall becomes what? Taxable at a normal rates. Separate books of account are mandatory if the RNPO carries on any commercial activity. In practice, maintain clear records, distinguish between the corpus and donations from general donations, and keep proper vouchers for all applications. So many disputes are when application is not properly documented, or when funds are diverted for non-charitable purpose, and that will be very difficult at the time of the assessment to explain or corroborate. So please take care for that particular part. Let's move on to commercial activities by RNPO under section 344 to 346. So here RNPO are allowed to carry on incidental commercial activities as earlier also law also provides that same thing here also here only if they are directly related to their charitable objects. So if receipts from such commercial activities exceed the prescribed limit as same in earlier law, the exemption may be denied for that year or registration may be impacted in a serious cases. So new act explicitly requires what maintenance of a separate books of accounts for commercial activities. For example, a hospital or a RNPO running a pharmacy as an incidental activity must keep what separate accounts for that particular activity. So if commercial receipts breach the limit significantly, say 20% or more, then stricter consequences may follow. So advise your clients to keep commercial income well below the safe limits, that is 20%, and maintain the robust documentation to avoid denial of exemption in future assessment. Let's understand approval for donor deduction. Section 354, very important. Earlier, it is section 80G. So donors can claim deduction under section 80G only if the RNPO has a valid approval, that is 80G under Old Income Tax Act. So new Income Tax Act has integrated the 80G approval process under what? Section 354. Please note down. Corresponding section to 80G is now section 354, making it more streamlined. Okay, so RNPO must file an annual statement of donations received in the new form 113 and issue what standardized certificates to donors. So this ensures what greater transparency. In practice, many genuine RNPOs benefit from ATG approval because it encourages what donations. However, any non-compliance with filing of a donation statement or misuse of the funds can lead to withdrawal of approval and complaints from donors. So always advise RNPO clients to file their donation statement on time. Let's move further. Audit and compliance requirements. Okay. So RNPO are required to get their accounts audited and file the audit report in the new unified form 112, earlier 10B or 10BB. So which replaces the earlier form, right? 10B or 10BB. So audit is mandatory if the income before claiming any exemption exceeds the basic exemption limits. Due date is aligned with the ITR 7 filing deadline. So new rules have rationalized what record retention periods, generally 6 years. All filings are mandatory. All filings are mandatory electronically with the detailed schedule. So in practice, Form 112 requires bifurcation of the receipts, applications, and related party transactions. So update your audit templates with a new section references and ensure what proper disclosure of all transactions to avoid any adverse remarks. Let's understand return filing for RNP. So registered non-profit organization file their return in ITR 7, yes, which continues with updated schedules showing details of income application, accumulations, and donation. Filing is mandatory if total income before the exemption exceeds their basic exemption limit. So all written provisions are now unified under section 263. Earlier section 139 is now section 263 of the new Income Tax Act 2025. So the due date for audit cases remains 31st October. In the transition year, maintain parallel records and reconcile old and new provisions what carefully. So later filing can result late filing can result in loss of exemption benefits in some cases. So timely filing is crucial and critical. Moving further, violations and consequences, sections 351 to 353 under Income Tax Act 2025. So let's see what are under that. So new act clearly lists the violations that can attract what adverse consequences. These include diversion of the funds for private benefit, receipt of anonymous donations beyond the prescribed limits, and failure to apply income for charitable purpose. So in such case, tax is levied on specified income at the rate of 30% or higher rate also. So there is also an exit tax, that is tax on accredited incomes if the RNPO converts into a non-charitable entity or dissolves. So registration can be cancelled in serious cases of violation. Anonymous donations continue to be taxable at what rate? 30%. Yes, beyond the prescribed limits. So advise RNPO clients to strictly comply with related party rules, application norms, and documentation requirements to avoid what these consequences in future litigation or assessment. Let's see practical checklist for RN. So here is a I try to provide you the practical checklist. Okay. So first verify or renew your registration under the new framework wherever required. Second, ensure at least 85% of your regular income is applied towards your objects with proper supporting documents and vouchers. Third, file audit report in Form 112 and IDR 7 within the due dates. Fourth, issue donation certificates to the donors and file the annual donation statement in Form 113. Fifth, if any commercial activity is carried on, then maintain separate books and keep receipts below the prescribed limit, that is, I think, 20%. So, following the checklist annually will help what RNPO avoid notices and continue to enjoy the exemption benefits smoothly. Moving further, let's see key changes old versus new. To summarize the RNPO segment, all scattered provisions have been brought under what one consolidated chapter, that is, we can say under one umbrella. So multiple old forms have been rationalized into new forms, renumbered it 104 to 113. One notable change is that the special treatment for what? Capital gains. Yes, that is now been earlier it was separate deduction available. Now it is removed and they are now subject to the 85% application rule. So registration validity has been extended to 10 years for a smaller RNPO to reduce the compliance burden. Overall, new act has enhanced what transparency through better use of tables, schedules, and a unified audit form. So there is no increase in tax burden for genuine charitable activities. The focus is on simplification and better compliance under the new Income Tax Act 2025. So let's have a few case studies. Okay. So first, let's see. An educational trust receives rental income from its building and general donation. So it must apply what at least 85% of their regular income, including rent, towards what educational objects. So to get the non-taxable income. So corpus donations can be kept aside. Second case, let's have a hospital RNPO runs a pharmacy, as I said in my earlier notes also, as an incidental activity. It must keep what separate books for the pharmacy and ensure the commercial receipts do not exceed the prescribed limit, that is 20%. Otherwise, exemption may be what? Denied. Third case, a trust sells a capital asset. The capital gain is now should be a part of your regular income and must apply at 85% also. Rule is applied. There is no automatic exemption on reinvestment. So proper planning for reinvestment is what required. So next, fourth is if funds are diverted for private benefit or anonymous donation exceeds the limits, the RNPO may face tax on specified income at 30% and risk of cancellation of registration also. So these examples show why proper application, documentation, and compliance are critical for RNPO. Let's understand common pitfalls to avoid. So some common pitfalls that RNPO and their advisors should avoid are mainly to still treat the capital gains as an having separate exemption, but that is not from the 2627 under the new act, under the tax year 2627. They must follow the 85% application rule. Inadequate documentation or documentation of how income was applied often leads to what disallowance during the assessment. So missing the annual donation statement in Form 130 or the audit report in Form 112 can create compliance issues. Related party transaction must be properly disclosed. And finally, after 1st April 2026, always use the new section numbers, new forms. So being aware of these pitfalls will help us guide your RNPO clients effectively and avoid unnecessary demands. So practical takeaways from today's session is read FAQs from income tax portal, as I said earlier, for transitional clarity and various provisions. Update all your templates with a new section numbers. So maintain mapping sheet for old versus new during 2026 transition. Use portal mapping utility for smooth shift. And at least you must prepare a one-page summary of old versus new, whatever sections or forms applied for your particular client as per your clientele, that you need to put it on your screenshot, or you put on your decks for next coming 6 to 7 months, to you can easily move from old to new references like PDS, also the new forms, new sections that need to be taken care of. So you need to train your staff also. So that's it from today. Thank you. Thank you so much for patient hearing. If you have any questions, observations, suggestions, then do let me know via WhatsApp, email, or you can also message below the video. So if you are not yet subscribed Tax Guru YouTube channel, then do subscribe for latest updates and video series like this. Hope you are gaining valuable knowledge from all these updates and video series which we are conducting on a Tax Guru YouTube channel. Thank you so much once again. Bye bye. Take care. See you soon. Hare Krishna.